We are seeing the sequential downward impact when it comes to production as well as deliveries. Now, obviously, we know about the impacts when it comes to the pricing war between Tesla and pretty much the rest of the EV space, but this is also a sign of still having issues with the supply chain.
Welcome back to Next Gen Investing. Let's talk some Tesla, as is tradition on Next Gen Investing. The stock doing pretty well again today as it pushes back towards $300 a share. What a move. This stock got down to $100, 101.81.
All that and more, so let's get to it. Tesla closed a little over 2% higher today, but remains down for the week. Year to date, however, Tesla is up 157%. There is no shortage of Tesla volatility. Traders beware. Tesla Q2 earnings are on the way and they should be fairly bullish. The only real number to watch out for is that gross automotive margin.
Our look at a developing story with Kevin Green, senior markets correspondent here on the network. So Kevin, we're looking at Lucid today, and Lucid has been on quite a nice tear, at least over the last several sessions. Some volatility, not unusual for this name, but they did produce fewer cars in their second quarter, and investors are not pleased.
Yeah, we are seeing the company actually produce around 2,173 vehicles for the second quarter, and they actually delivered 1,404 vehicles. Now, that is actually down from the first quarter, which they made 2,314 vehicles compared to the deliveries also of 1,406 vehicles. And then once again, that's actually down from the fourth quarter. So we are seeing the sequential downward impact when it comes to production as well as deliveries. Now, obviously, we know about the impacts when it comes to the pricing war between Tesla and pretty much the rest of the EV space, but this is also a sign of still having issues with the supply chain, which has been an issue for them over the last year now. We are actually seeing, for the most part, some of these other EV companies like Rivian continuing to ramp up their production, and they're on track right now to have about 51,000 cars that are going to be produced, which would be above the company's guidance. If we go back to Lucid, if they're going to continue at the same pace that we are seeing in the second quarter, they're going to produce around 13,000 vehicles for the quarter. I'm sorry, if they actually are on this pace, they're going to produce around 8,800 units for the year, which is going to be short of their guidance of 10,000 units. And that's going to be well short of Wall Street's expectations that they had at the beginning of the year of 20,000 units. So once again, this is not a really good backdrop when it comes to Lucid and its quest for growth. But we are seeing some other opportunities for the company as they are able to outsource some of their technology to other companies that want to be able to utilize it within their own platforms. And that might be an area of interest when it comes to this company. Maybe they won't be able to be successful as a manufacturer of vehicles, but maybe they can be very successful in selling their technology and leasing their technology out to others that are within the space that might be able to try to drive down costs. So that's really what we are seeing in the stock today as far as the report, as well as this move to the downside.
Let's go ahead and pull up that production deliveries chart again. We've got Rivian, Lucid, and Tesla on this chart for good reason, because they're all EV startups that only produce battery electric vehicles. As you can tell, Tesla's numbers are significantly higher than their comrades here. And you might be saying, whoa, Tesla's been at this a lot longer than these companies right here. And my counter to that would be, Tesla was founded in 2003. Lucid came into being in 2007. That's a 4-year gap. Not to mention the CEO, Peter Rawlinson, gained invaluable experience while creating the Model S. And quite frankly, it shows the Lucid is a beautiful, beautiful car. Lucid, as our guy mentioned earlier, had expectations of 20,000 vehicles for the year, and they're nowhere close. In fact, they're probably not even going to make their revised guidance of 10,000 for the year. I don't like it, and I wouldn't touch it with a 10-foot pole. But it's not to say they're dead in the water yet. There's going to be a lot of blood, sweat, and tears along the way if Lucid is going to be successful. You just won't catch me betting on it.
To me here is, I think it's incomparable to a name like Tesla, right? Because Tesla is so much larger. Its market cap is incomparable to a name like Lucid. But when you look at actually Rivian, given its second quarter numbers now, they've been able to maintain that pace in third and fourth quarter. They will slightly exceed what the street has been expecting, which is around 50,000 units. Now, Lucid is now maintaining a pace to miss its mark, like you said. But what's even more concerning to me than that is they're expected to miss that 10,000 unit mark, right? But the street Street initially had called for 20,000 units. So could we see this trend persist? Because this is a problem to me if you're not even able to make your forecast that was then cut in half.
Yeah, that is going to be the issue, especially if you're unable to try to ramp up and scale, because at this point in time, if you're not producing a lot of cars or you're not ramping up that production, and the cost of each car that you produce starts to go up as well, it eats into your margins, which is the different scenario that Rivian is seeing. They've been able to build up their manufacturing capabilities, trying to bring together their supply chains, and in doing so, they've been able to meet the street's expectations and potentially beat the street's expectations at the end of the day. But they still have a long way to go as well, but they're on the right trajectory, whereas Lucid seems like it's going in the wrong direction. And at some point in time, you may have investors that start to question if it's the best use of their cash, because as the cash burn goes up, then obviously that's going to eat into any type of profitability or even increase losses, which is going to have a direct impact on the stock. And we know that there's a lot of institutional investors that are within Lucid at this point in time. And it's, you got to ask yourself, how long are they going to be able to hold this type of performance?
Right. The only one thing I will say to end on a positive note is if you've ever seen a Lucid, I'm not sure if you've seen them in person because they're so few and far between. They're so cool. But I think I just get excited to see any relatively new car because it's so rare. They're like a boat. They're such a large car that I'm excited just on the concept because they're very, very cool cars, although very, very expensive. But we will leave it there. Kevin Green, appreciate all of the insight as always.
She ain't never lying. Beautiful, beautiful car. Just probably gonna die after this generation. It's no problem. Live fast, die young. Bad girls do it well. I don't know.
Welcome back to Next Gen Investing. Let's talk some Tesla, as is tradition on Next Gen Investing. The stock doing pretty well again today as it pushes back towards $300 a share. What a move. This stock got down to $100. 101.81 was the low in this stock, and it's now 274. What a return in this stock.
101, sell it. Get rid of it. It's going to zero. Wait. It's 278. Oh, don't sell it. Double down. Buy calls. Buy calls that expire in 2024, 2025. Do it now. Oh, too late.
I know, street analysts, I think one of the highest price targets is around like $350 now. So the street sees further upside for a name that's up 120% on the year. So it's been a really interesting name to watch. We are seeing some specific analyst news today with Citi actually raising its price target to $278 a share from $215, while also keeping actually a neutral rating. So staying a little bit more to the sidelines here. They maintained this more constructive stance on the U.S. automakers stocks as a whole following the recent vehicle density survey, and they actually see GM as having the most compelling second quarter setup. They see a neutral to slightly negative setup for shares into their second quarter report, saying the bear case really argues that for second quarter, a stretched valuation leaves the stock vulnerable going into a quarter that could be impacted by price cuts, with any margin shortfall or even just unimpressive numbers possibly dampening sentiment. And that, I think, is important. When you have shares that have been on a tear like this, you're priced to perfection. There's a lot of expectations riding high into their second quarter print, which is coming up now in the near-term horizon. So I think this is a really good point. 170% off their 52-week low. Like you said, this was a $100 stock not too long ago. The margins still being questioned. That's my focus into the second quarter report. So volatility, I love to talk Tesla because there's always news behind it. And there, of course, like Alex, we've said a million times, there's so many opinions on this name.
Price to perfection. Wall Street figures Tesla has outkicked their coverage. No doubt they're the best EV automaker in the world, with the exception of some idiots thinking that BYD is in front of them, but we're not going to go there right now. 100 million new vehicle car sales per annum, and less than 10% of those are battery electric vehicles. Internal combustion engines are still king. For now. The analysts with $350 price targets, or myself with a $364 fair value estimate in the bear case, we believe Tesla is something much more than just an automobile company. Tesla is seeing unprecedented demand for their Megapacks and Powerwall stationary storage units. Yeah, I agree. Opportunity is abound. That's why some of the research reports say Tesla has nowhere to go but down. It's because they're not assessing any of those other metrics. Just looking at Tesla from a pure automotive play, you might be able to make a case for that. But even still, if we're just looking at automotive, I don't agree. Tesla has legs, at least $70 worth of leg in my bear case. This difference of opinion may be one of the biggest bear bull arguments in the history of the stock market.
As if the analysts are just a little bit gun shy to bet against this one. Look, if you were neutral and you had a rating of 215, you're probably bearish now. Let's just be honest. The stock's $60 higher. You didn't change your rating. You just moved the price target up. You were wrong. It's okay to be wrong. You know, Tesla moves. It maybe came back, but it does seem that the maturation of this company has really changed how analysts assess it. There is this willingness to kind of just plant these neutral ratings, reasonable price targets, sort of where the stock is. 2-3 years ago, it was like this stock's going to 1,000 or this stock's going to 0. Those were your two options, and it seemed like you either were in one of those camps or you didn't follow financial markets.
I mean, that's so true. And I still think it's funny. There is still a $24 price target from, I think, Notorious Bear on this name. $24. It's like, come on, man, stop being stubborn. Just adjust to the fact that we
At least he's got some conviction, or she.
You know, I do respect the conviction, I guess, in Tesla, because it seems like there are pretty much everyone that follows this name does have a relatively strong conviction, but we will leave it there. Great update there on Tesla, of course, making a nice modest move higher on the session.
You're either in one camp or you're in another. I think you know which camp I'm in. Tesla has been defying odds since their inception, and I don't see that trend stopping anytime soon. In conclusion, if Lucid ain't in trouble, I don't know what trouble looks like. If it don't make dollars, it can't make sense. Rivian, on the right path. Still a long way to go, but I am rooting for their ultimate success. Tesla continues to grow, despite being priced for perfection. I guess it really depends on which angle you're looking at it from. Either way, all eyes on that automotive gross margin number, while every other aspect of their business seems to be getting overlooked. Don't sleep on Tesla Energy, and definitely don't sleep on full self-driving, which should be completed by the end of this year. Am I channeling my inner Elon Musk? I don't know, but I truly believe that. I use full self-driving every time I'm in my car. I'm actually excited to get behind the wheel of the car and engage in the full self-driving feature. Truly is magnificent if you have not yet experienced it. But that's all I got for you today. Be easy. Peace.